Stop everything. What you're witnessing right now, this very morning of January 19th, 2026, is not just another price movement in precious metals. This is the beginning of the most spectacular wealth transfer in modern financial history, and if you're not paying attention to what happened in the last 24 hours, you're going to wake up in a world you don't recognize. I'm William Lee, and I'm here to tell you the truth that the mainstream media refuses to acknowledge, the truth that the banking cartel is desperately trying to hide from you. Let me start with what happened at the market open this Monday morning. We witnessed a gap up in silver that sent shockwaves through every trading desk, from New York to London to Shanghai. The price didn't crawl higher, it didn't edge up slowly, it exploded. We're talking about silver blasting through resistance levels that analysts said would take months to break. And here's where it gets wild. Within hours of that opening bell, the Chinese and Japanese markets unleashed a tsunami of capital into silver. We're not talking millions. We're not talking hundreds of millions. We're talking billions upon billions of dollars flooding into physical silver and silver contracts simultaneously. When I woke up this morning and checked the charts, I had to look 3 times to make sure I wasn't seeing things. Silver is now trading above $94 per ounce. Let that sink in for a moment. $94. We are making new all-time highs every single week now, and the pattern is undeniable. If this momentum continues, and every single indicator I'm watching tells me it will, we're going to see $100 silver before this week is over. Not next month, not next quarter, this week. We are talking about days, maybe even hours, before silver crosses that psychological barrier that everyone said was impossible. This is not speculation. This is not hope. This is mathematical inevitability based on the logistics trap that I'm about to expose to you. The dollar is collapsing at an alarming rate, and you can smell it in the air. Every central bank in the world knows it. Every major institution knows it. The only people who don't know it are the ones still watching cable news and trusting their financial advisors who are reading from scripts written by the very banks that are about to implode. Now, I need you to understand something crucial before we go any further. I am the real William Lee. There are copycats out there, channels trying to steal this information, trying to ride on the research that I spend countless hours putting together. But I'm here for one reason only, to help you break free from the chains that this system has placed on you, to help you see the truth, to help you protect yourself and your family from what's coming. If you appreciate what I'm doing here, if you value having someone tell you the unfiltered truth, let me know in the comments. Hit that like button. Let the algorithm know that real analysis matters. Because what I'm about to reveal to you is something the banking establishment would pay millions to keep quiet. Let me take you back to last Sunday, January 18th, 2026. While most people were relaxing, enjoying their weekend, completely oblivious to what was brewing, something happened that changed the entire structure of the global silver market forever. President Trump announced something that the mainstream media laughed at. They made it into a joke. They focused on the headline about Greenland, about trying to purchase a frozen island in the North Atlantic. The late-night comedians had a field day. The Danish politicians were outraged. The news cycle turned it into entertainment. But while the media was laughing, while the pundits were making their sarcastic comments, the risk managers at JP Morgan, at HSBC, at every major bullion bank in London and New York were not laughing. They were screaming. Because buried in that announcement, hidden behind the spectacle of the Greenland purchase, was a single sentence that effectively detonated a nuclear bomb in the global silver market. President Trump announced a 10% tariff on all imports from 8 European nations, including the United Kingdom, starting February 1st. And here's the kicker. If a deal for Greenland isn't reached, that tariff jumps to 25% on June 1st. To the average person watching the news, this sounds like just another trade dispute. It sounds like political theater. It sounds like Trump being Trump. But to anyone who understands how the global silver market actually functions, this is an extinction-level event. Let me explain the mechanics of what just happened, because this is where most people get lost. The global silver market operates on a principle called fungibility. It's a fancy word that means a bar of silver in London is supposed to be worth exactly the same as a bar of silver in New York. More importantly, the entire system relies on the ability to move that metal back and forth across the Atlantic Ocean cheaply, easily, and without friction. The bullion banks have been playing a game for decades. I call it whack-a-mole, and it's the foundation of how they suppress the price of silver. Here's how it works. When the price of silver starts rising in New York because of high demand, the banks take silver out of their vaults in London, specifically from the London Bullion Market Association vaults, and they fly it to New York. They flood the market with physical metal to push the price back down. Conversely, when London runs dry, which has been happening with increasing frequency due to the insatiable demand from India and China, they take silver out of the COMEX vaults in New York and fly it to London to refill those shelves. This constant flow of metal across the Atlantic Ocean is the lifeline of the entire suppression scheme. It allows the banks to create the illusion that there's always enough silver. They shuffle it around like a shell game, moving it to wherever the fire is burning hottest, wherever the demand is threatening to break their control over the price. But stay with me here. because this is where the trap snaps shut. What happens when you put a 10% tariff wall right in the middle of the Atlantic Ocean? What happens when the United Kingdom, the home of the LBMA, the heart of the global physical silver trade, is on that tariff list? Starting February 1st, if a US bank ships silver to London to bail out the LBMA and then tries to bring that silver back to the United States later, they have to pay a 10% tax on the value of that metal. At $90 an ounce, that's a $9 tax per ounce. In the razor-thin margin world of bullion banking, that $9 doesn't just cut into profits. It completely destroys the entire arbitrage opportunity. It makes the whack-a-mole game mathematically impossible to play. Let me paint you the picture of what this means in practical terms. President Trump just turned the United States border into a one-way valve for silver. Metal can potentially come in, perhaps if it comes from a non-tariff nation like Mexico, but metal cannot leave for London. Because if it leaves, if it crosses that border heading east, it can never come back without a penalty that wipes out not just the profit, but the entire equity position of the bank that made that move. This creates what's called a trapped inventory scenario. Right now, as I'm recording this, the risk managers at every major bullion bank are looking at their spreadsheets, running their calculations, and they're issuing stop-move orders. They're telling their logistics teams to halt all exports immediately. They cannot risk sending a single ounce of metal to London if they can't get it back without financial suicide. This effectively cuts the LBMA off from the COMEX. It severs the connection between the world's two largest silver pricing hubs. And here's what makes this absolutely catastrophic. This is happening at the worst possible moment for London. Based on vault data that we've been tracking meticulously, London is critically short of physical metal. The flows to India and China have drained the LBMA vaults to historic lows. We're talking about inventory levels that would have been considered impossible just 2 years ago. The vaults are running on fumes. The amount of unencumbered silver, meaning silver that isn't already owned by an ETF or allocated to a specific customer, is frighteningly low. London was counting on a bailout. They were counting on the 4.2 million ounces that were withdrawn from the COMEX on Friday to save them. They were waiting for the cavalry to arrive from New York. They had their logistics teams ready. They had planes on standby. They were prepared to execute the largest emergency silver transfer in recent history. But because of this tariff announcement that dropped on Sunday, the cavalry is not coming. The silver that was supposed to fly to London is now grounded in New York. Those 4.2 million ounces that we discussed, that massive withdrawal that happened on Friday night, we thought that metal was leaving the country. We thought it was already in transit. But now, with this tariff creating an impossible financial equation, that metal is stuck. It's sitting in a warehouse, probably near JFK Airport, wrapped in plastic, tagged and ready to ship, but going absolutely nowhere. The owner of that metal now faces an impossible choice. They can ship it to London and trap it there forever, knowing that bringing it back will cost them 10% of its value, or they can keep it in the United States and either hold it or sell it to a domestic buyer. Given that uncertainty, given the risk profile, the smart move, the only rational move, is to keep it here. This is what I mean when I say we're witnessing a fundamental restructuring of the global silver market. This isn't a temporary disruption. This isn't something that's going to blow over in a few weeks. This is a permanent realignment of how silver flows around the world. Now let me explain the concept of what I call the Roach Motel effect, because this is absolutely critical to understanding what happens next. You know the old advertising slogan for Roach Motels, roaches check in, but they don't check out. Well, that's exactly what the United States bullion market has become. Silver checks into the US, but it doesn't check out. Here's the logic that every risk manager on Wall Street is grappling with right now. Let's say you're a bullion bank. You see that London is desperate for silver. The price is spiking. Your clients are panicking. You want to ship 1 million ounces from your COMEX vault in New York to your LBMA vault in London to stop that price spike and maintain control. Sending it there is easy. There's no export tax. You put it on a plane, it lands at Heathrow, and you've saved the day in London. You've suppressed the price. You've maintained the illusion of abundant supply. But what happens next month? What happens when the COMEX runs dry and you need to bring that silver back to New York to settle a futures contract? Now you have a catastrophic problem. Because that silver is coming from the United Kingdom, it gets hit with a 10% tariff at US Customs. If silver is trading at $90, you have to pay the US government $9 for every single ounce you bring back. That $9 comes directly out of your profit margin. And in the low-margin world of bullion banking, where traders are working with spreads measured in pennies, a 10% hit isn't just a loss, it's a complete catastrophe. It wipes out the profitability of that trade 10 times over. So the risk manager looks at that spreadsheet, runs those numbers and says, we cannot send the silver to London. Because once it leaves US soil, it effectively costs us 110% to get it back. the silver is trapped. The game is over. This destroys the whack-a-mole suppression mechanism that I explained earlier. The banks can no longer smooth out volatility. If London spikes to $120 while New York stays at 90, the banks cannot step in to close that gap. The tariff wall is in the way. The arbitrage opportunity that they've relied on for decades has been eliminated by executive order. This creates market segmentation. It means we're going to see wildly different prices for the exact same asset depending on where that asset is physically sitting. We might wake up tomorrow and see silver trading at $95 in New York, but $115 in London simply because the metal cannot move between those two cities. The law of one price, one of the fundamental assumptions of economics, has been repealed by a tariff on Greenland. But here's where it gets wild, and this is something that I don't think Trump or his advisors fully understood when they made this move. By trapping silver in the United States, by making it financially impossible to export, they have accidentally created a domestic strategic reserve. They have accidentally secured the American supply chain for one of the most critical minerals in the modern economy. Think about what silver is used for. It's not just jewelry. It's not just investment. Silver is absolutely essential for solar panels, for electric vehicles, for 5G infrastructure, for missile guidance systems, for every single piece of advanced technology that defines modern civilization. The US Mint needs silver, Tesla needs silver, Raytheon needs silver. Every tech company, every defense contractor, every manufacturer of advanced electronics needs silver. And we've been shipping it overseas. We've been letting it flow out of the country to suppress prices in London, to keep the game going, to maintain the illusion of control. But this tariff changes everything. If the banks cannot export silver to London because of the tax risk, that silver stays here. It stays in the COMEX vaults. It stays available for American industry. It stays available for American defense. It stays available for American technology. This forces what I call the ghost supply to remain within the borders of the United States. It's America first, applied to the periodic table. It forces the rest of the world, specifically Europe and the UK, to fend for themselves. It tells London, you're on your own. You cannot raid our vaults to save your exchange anymore. This puts the LBMA into what can only be described as a death spiral. London is the hub of the global physical silver trade. It's where the vast majority of silver flows to India and China are coordinated and settled. If London loses access to the US stockpile, they have zero buffer left. We know their vaults are empty, we know the float is gone, and now we know the resupply line has been cut. The geopolitical implications of this are staggering. We're watching the dismantling of the post-World War II financial order in real time. For 80 years, the global system has been built on the idea of frictionless trade, on the idea that capital and commodities can flow freely across borders, on the idea that the United States would be the guarantor and facilitator of that system. But that era is ending. We're entering a new age of resource nationalism, of trade wars, of countries hoarding what they have because they know that in a world of declining resources and rising demand, the nations that control physical commodities are the nations that will survive and thrive. China understood this a decade ago. That's why they've been buying gold and silver at an unprecedented rate. That's why they've been securing mining operations in Africa and South America. That's why they've been building strategic reserves of everything from copper to rare earth elements. They saw this coming. They prepared. Russia understood this. That's why they've been accumulating gold, why they've been moving away from dollar-denominated trade, why they've been building economic relationships with countries that the West has ignored or sanctioned. And now, whether intentionally or accidentally, the United States is joining that club. This tariff on the UK, this seemingly absurd dispute over Greenland, is actually the first domino in a massive shift toward recognizing that hard assets matter more than paper promises. Let me shift focus to what's happening in London right now, because this is where the immediate crisis is unfolding. The London Bullion Market Association is the beating heart of the global physical silver trade. While the COMEX in New York is essentially a futures casino where most contracts are settled in cash, London is where the big physical deals actually happen. It's where sovereign wealth funds buy. It's where central banks transact. It's where the real money moves real metal. For the last 3 years, London has been hemorrhaging silver. We've watched a relentless exodus of metal from the LBMA vaults heading toward India and China. The inventory has dropped to levels that many analysts consider critical, levels that would trigger alarm bells in any other market. The amount of silver that is actually available, that isn't already encumbered by ETF claims or customer allocations, is frighteningly low. London has been surviving on a lifeline. That lifeline was the ability to import metal from the Americas when things got tight. When the vaults ran dry, when the physical squeeze started to bite, they could call up the bullion banks in New York and say, "We need 5 million ounces by Thursday." And the banks would execute. They would drain the COMEX vaults. They would put that metal on planes. They would keep the game going. But President Trump just cut that lifeline. He made that transaction financially toxic. No bank in New York is going to ship silver to London if they have to pay a 10% penalty to bring it back. The economics don't work. The risk is too high. The decision has been made. So London is now an island, literally and financially. They're cut off from the COMEX. They're cut off from the Mexican supply chain. And they're still facing the insatiable demand from the East. China is still buying. India is still buying. The Shanghai Gold Exchange is still offering premiums that pull metal out of Western vaults. This creates a siege mentality in the city of London. When the sun rose on Monday morning, when those traders walked into their offices, when they looked at their screens and saw what had happened over the weekend, they realized they were insolvent in physical terms. They had sold more silver than they had access to. They had written contracts they couldn't honor, and the backup supply from New York was not coming. This is the recipe for a default. Not a technical default, not a regulatory default, an actual physical default where someone shows up demanding their silver and the vault is empty. We could see a situation, and I believe we will see this situation very soon, where the price of silver in London completely disconnects from the price in New York. We could have silver trading at $95 in the US but $120 in London. Why? Because in London the metal is scarcer, and because it cannot be arbitraged away due to the tariff, that price difference will stick, it will persist, it will widen. This kills the concept of a global spot price. If you have a price in Shanghai, a price in London, and a price in New York, and those prices are all different, which one is the real price? The answer is simple. The real price is the one where you can actually get the metal. The bifurcation of the market is a nightmare for the banks because it destroys their hedging models. Most major banks run what's called a global book. They might be long silver in London and short silver in New York. In a normal world, these positions cancel each other out. They're hedged. The bank is protected from price movements because gains in one location offset losses in another. But if the price in London screams higher, while New York stays relatively stable, their hedge breaks. They start losing money on the spread. The positions that were supposed to protect them are now bleeding capital. This forces them to close their positions. They have to buy back their shorts in New York, they have to sell their longs in London, and this creates massive buying pressure in New York. So here's the paradox that most people won't understand. The tariff that traps silver in the US actually forces the US price to rise. The banks have to buy New York contracts to cover the risk that London blows up. The idea that trapped inventory would crash the US price is completely wrong. It creates a panic bid as banks scramble to rebalance their broken books. And let's talk about unallocated accounts in London, because this is where things get truly terrifying for anyone holding paper silver. Millions of investors around the world hold unallocated silver with LBMA member banks. This is essentially a fractional reserve banking system for metal. You give the bank your money, they give you a credit that says you own silver, but that silver isn't actually sitting in a vault with your name on it. It's part of a pool. It's theoretical. It's a number in a database. If London is cut off from supply, if the vaults are running dry, the risk of an unallocated default skyrockets. If you hold unallocated silver in London right now, you're basically holding a paper IOU from a bank that just lost its main supplier. When the market realizes that London is besieged, when the reality of the situation becomes undeniable, we're going to see a massive run on unallocated accounts. Investors will rush to convert their unallocated credits into allocated bars. They'll demand physical delivery, but there aren't enough bars. The vaults don't have the metal to satisfy those claims. This forces the banks to go into the open market and bid for any metal they can find. They have to buy from anyone willing to sell, and this is how a liquidity crisis turns into a solvency crisis. This is how banks fail. The Greenland tariff has exposed the fragility of the entire global system. It has shown us that the silver market is not a unified ocean of liquidity. It's a series of connected pools, and those connections are breaking. London is draining fast. New York is filling up with trapped capital that cannot leave. This makes the US market the most secure silver market in the world right now. If you own physical silver in the United States, if you have bars in your possession or stored in a domestic vault, you are holding strategic inventory. You are holding an asset that cannot be shipped overseas without a massive financial penalty. You are holding something that American industry needs. You are holding real wealth in a world of collapsing paper promises. But if you own paper silver in London, if you have unallocated accounts, if you're relying on ETFs that store their metal in LBMA vaults, you are holding a liability that is about to be tested in ways that haven't been tested in decades. The divergence between these two markets is going to create chaos. On Monday morning, when the markets opened, we saw the beginning of this chaos. We saw wider spreads. We saw arbitrage bots malfunctioning because the prices didn't make sense anymore. We saw algorithms designed to trade on the assumption of a unified global market suddenly encountering a reality where that assumption no longer holds. And remember those 4.2 million ounces that were withdrawn from the COMEX on Friday, we can now be almost certain that metal is stuck. The owner of that metal is sitting on a massive pile in New York that they cannot export without taking a 10% loss. So what are they going to do with it? They're going to hold it, they're going to wait, or they're going to sell it to a domestic buyer. Maybe Tesla needs silver for their gigafactory. Maybe the US Mint needs silver to strike coins. Maybe a defense contractor needs silver for electronics. That metal is going to stay in the United States and it's going to be sold at a premium because the buyer knows that metal is not leaving the country. This implies that the domestic supply in the US might stabilize in the short term, but it's going to stabilize at a much higher price point. The tariff acts as a floor for premiums. It bakes inflation into the physical product. Because if you're a dealer and you sell your silver today, you know that replacing it tomorrow is going to cost you more because imported silver from European refiners just got 10% more expensive. This validates everything we've been saying about premiums exploding. We talked about $120 street prices when spot was at $85. People thought we were crazy. But look at what's happening. The tariff trap is the ultimate unintended consequence. A dispute over an island in the Arctic has triggered a meltdown in the city of London. It proves how tight this market truly is. In a market that's running on fumes, in a market where the inventories are depleted and the supply chains are stretched to the breaking point, a 10% tariff is like throwing a lit match into a powder keg. The explosion is inevitable. The only question is how big it's going to be. Now, I need to address the geopolitical chessboard here because what's happening with silver is not happening in isolation. This is part of a much larger realignment of global power. The dollar's dominance as the world's reserve currency is under attack from multiple directions simultaneously. The BRICS nations, Brazil, Russia, India, China, and South Africa, have been working for years to create alternative payment systems that bypass the dollar. China has been settling oil trades in yuan. Russia has been demanding payment for natural gas in rubles. Saudi Arabia is now accepting payment in currencies other than dollars for their oil. These are not random events. This is a coordinated effort to dethrone the dollar. And as the dollar weakens, as faith in fiat currency erodes, smart money flows into hard assets: gold, silver, real estate, commodities, things that cannot be printed, things that have intrinsic value, things that will still be worth something when the paper system collapses. We're seeing this play out in real time right now. The Chinese and Japanese markets, as I mentioned at the beginning, have injected billions into silver purchases. This isn't retail investors buying coins. This is institutional money, sovereign wealth, central banks moving into physical metal because they know what's coming. They know the dollar is dying. They know the debt levels in the United States are unsustainable. They know that when you have $36 trillion in national debt and you're adding another trillion every 100 days, the end game is inevitable. The only question is whether that end comes through default or through inflation. And the answer is always inflation because governments will always choose to print rather than admit bankruptcy. But when you print, when you devalue the currency, hard assets go up, not because they're becoming more valuable, but because the measuring stick, the dollar, is becoming less valuable. And silver, because of its dual nature as both a monetary metal and an industrial commodity, benefits from both sides of that equation. Let me get very specific about what you need to do right now. This is not financial advice. I'm not a financial advisor, but I'm going to tell you what I'm doing and what I think anyone with half a brain should be doing. Number one, geographic diversification is dead. In a world of trade wars, in a world where moving metal across borders is becoming impossible or prohibitively expensive, the safest place for your silver is where you are. If you're in the United States, your silver should be in the United States. Don't try to store it overseas thinking you're diversifying. You're actually creating risk because you might not be able to access it when you need it. Number two, ignore the spot price. The spot price you see on financial news networks is now just a mathematical error. It's an average of two broken markets. It doesn't reflect reality. Value your stack based on replacement cost. If you sold your silver today, could you buy it back tomorrow? At what price? What premium would you have to pay? That's the real price. That's what matters. Number three, play the long game. The tariff on the UK is just the first domino. This is the beginning of a massive shift toward resource nationalism. Every country is going to start hoarding what they have. Every nation is going to realize that in a world of scarcity, the countries that control physical resources are the countries that survive. We are returning to a world where hard assets are the only collateral that matters. We're returning to a world where paper promises are revealed as worthless. We're returning to a world where silver and gold are money and everything else is credit. The tariff trap has locked the door. The silver is staying in the United States. And as we head into this week, as we watch the chaos unfold, as we see the banks scrambling and the media confused, you need to understand what's really happening. The government, whether intentionally or accidentally, has rigged the game in favor of the physical holder. They've created a situation where the smart money, the patient money, the money that understood what silver really is going to be rewarded beyond their wildest expectations. So hold your position. Do not get shaken out by volatility. Do not panic sell when you see the price dip because the banks are trying one last desperate smash. Do not let fear or uncertainty make you give up your position at exactly the wrong moment. Because eventually, and I believe very soon, the price is going to settle much, much higher than $94. We're talking about silver that could trade at 150, 200, even higher in a true supply crisis. And that supply crisis is no longer theoretical. It's here. It's happening right now. We are living through one of the most beautiful moments in silver's history. We are making new all-time highs every single week. The trajectory is undeniable. The momentum is unstoppable. And the fundamentals have never been stronger. The dollar is collapsing. You can see it. You can feel it. The purchasing power is evaporating. The confidence is fading. And smart money is moving into the only assets that cannot be devalued by a printing press. I want to be absolutely clear about something. I am here to help you. I am here to give you the information that the mainstream financial system doesn't want you to have. I am here to connect the dots that they deliberately leave disconnected. My goal is not to sell you something. My goal is not to pump my own position. My goal is to help people break free from the limits that this system imposes, to help you become financially sovereign, to help you protect yourself and your family from what's coming. If you appreciate what I'm doing here, if you value having someone tell you the unfiltered truth, let me know in the comments. Ask your questions. I read every single comment. I respond to as many as I can. This is a community of people who understand that the official narrative is a lie. This is a community of people who are taking responsibility for their own financial future. And if you found value in this deep dive, hit that like button. Share this video. Because the algorithm suppresses content like this. They don't want this information spreading. They don't want people waking up. But every like, every share, every comment helps fight that suppression. The week ahead is going to be one for the history books. We are going to see price movements that will shock people. We are going to see volatility that will shake out weak hands. We are going to see the beginning of a transition that will reshape the global financial system. Stay focused on the physical reality, not the paper illusion. Stay focused on what you can hold in your hand, not what exists as numbers on a screen. Stay focused on the long-term trajectory, not the short-term noise. The banks are trapped, the logistics have broken, the supply chains are fractured, and silver is finally going to trade at its true value, not the suppressed value, not the manipulated value, but the value that reflects its scarcity, its utility, and its role as real money in a world of fake currencies. We are witnessing the death of the old system and the birth of something new. And those who positioned themselves correctly, those who understood what was happening before it became obvious, are going to be rewarded in ways that most people cannot even imagine. This is William Lee, and I'm here to help you navigate this transition. Stay safe, stay smart, and keep stacking. The best is yet to come.